Hi friends, welcome to Konexio Technical Insights. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns in Nifty, Bank Nifty as well as on the different asset classes. Now first of all, let us discuss what we have mentioned in our last video. In our last video, we mentioned that the primary trend is positive and it should be used as a buying opportunity and we were expecting market to rally from those particular levels. Market did traded positively. It remained range bound throughout the week, but as per our expectation, market didn't perform. But throughout the week, it consolidated and ended on a flat note. Now let us go to the Nifty daily charts and we'll try to figure out what could be a trend for the next week. Now on the Nifty daily charts, you will see that Nifty has been moving in this downward falling channel, and this we have been discussing since last 2 months. Last week we were expecting a breakout, but that didn't happen. But looking at this particular two dojis on Thursdays and Friday, we feel that this was a consolidation. And looking at to the US markets on Friday, we feel that we might see a breakout in the next week or in the coming week. So definitely the trend is positive, and we are expecting Nifty to break out from this particular channel in a couple of days. So the trend remains to be positive, and it should be used as a buying opportunity. Now, friends, let us go to the Nifty daily charts, or let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 17,744. Below that, the second support is placed at 17,584. Below that, the third support is placed at 17,353. Whereas on the upside, the first resistance is placed at 17,971. Second resistance is placed at 18,100. And third resistance is placed at 18,201. These are the important supports and resistance level in Nifty. Traders should try to follow these levels and just trade in the direction of the primary trend. Now, friends, let us discuss the derivative data of Nifty. In Nifty call option, you can see the action was seen in 17,900 calls, then 18,000 calls, then 18,100 calls, and 18,200 calls. Here you can see there is a rise in the volumes, the open interest is rising, implied volatility is very low, it is between 8.84 and 9.32. The only thing is that there has been a drop in the Nifty calls option premium. Now, this might be because Nifty has been consolidating for last two trading sessions, Thursday and Friday. So smart money might have been thinking that Nifty might consolidate because in the last 2 days Nifty has been trading in the range of 17,900 on the upside, and on the downside 17,750 and 800. So you can see, looking at these particular volumes, the concentration of volume is in 17,900 calls. Once it breaks those particular levels, then we might see Nifty rallying towards the level of 18,000 and 18,100. So definitely, looking at this data, the most important part in this data is the low implied volatility. Low implied volatility means the trend is positive. So we might see a breakout in the next week. Now let us discuss the Nifty put option. Now in Nifty put option, you can see the action was seen in 17,800 puts, 17,700 puts, 17,600 puts, and 17,500 puts. Now here also you can see rise in the volumes, there has been rise in the open interest, implied volatility is comfortable zone, it is between 11.70 and 12.62. The option premium is also flat. So definitely looking at as I said, that last 2 days of last week were very flat. Nifty didn't go anywhere, it remained at the same levels. Hardly 100 points of movement was there throughout the day for last two trading sessions. Because of that, we have seen the flat option premium. But as I said, looking at this particular option or volumes, 17,800 could act as a very strong support area. So any dips uh, between 17,800 and 17,700 should be used as a buying opportunity from these levels. So now, friends, let us discuss the charts, daily charts of Bank Nifty. You will see the daily charts of the Bank Nifty. Now in Bank Nifty also similar kind of pattern was seen, a downward falling channel. It is just on the verge of a breakout. Last week or throughout the week, we have seen Bank Nifty was also consolidating in a very narrow range. It ended on a flat note. This is the daily charts. On weekly charts also, it was some kind of doji or long-legged doji, what we call it. So lower level, we have seen a support. You can see small shadows on the daily charts on a daily candle of in the last two four trading sessions. So this shadow indicates that Nifty, or sorry, Bank Nifty is on a verge of an upside breakout. So definitely the trend remains to be positive. Primary trend is also positive. So any dips should be used as a buying opportunity. RSI is also placed with positive signals. Now, friends, let us discuss the important supports and resistance level in Bank Nifty. The first support in the Bank Nifty is placed at 41,095. Below that, the second support is placed at 40,609, and third support is placed at 40,167. On the upside, the first resistance is placed at 41,791. Second resistance is placed at 42,015, and third resistance is placed at 42,055. These are the important 42,555. So these are the important supports and resistance level in Bank Nifty. Traders should try to follow these levels and trade accordingly in the direction of the primary trend. And the primary trend we feel is positive. Now, friend, let us discuss the derivative data of Bank Nifty. Yes, in Bank Nifty call option, you can see the action was seen in 41,600 calls, then 42,000 calls, then 42,500 calls. Now here you can see there was rise in the open interest, rise in the volumes. Implied volatility is in comfortable zone between 12.80 to 13.4. The only thing is that we have seen that sharp drop in option premium. Uh, that was because last two trading sessions we have seen on expiry day also it was a flat closing, and on Friday also there was a flat closing. So smart money might have thought that the Bank Nifty might not breach 41,600. So there was a lot of pressure on this particular out of the money calls. So looking at to this particular volume, we feel that if Bank Nifty crosses 41,600 decisively, then we might see Bank Nifty testing the levels of 42,000, 42,500 in the next week. So definitely looking at this particular data, we feel that the momentum is still positive. Once it breaks 41,600, swing traders can buy Bank Nifty above 41,600 for an upside target of 42,000 and 42,500 for next week. Now let us discuss the Bank Nifty put data. In put data, we have seen that action was seen in 41,500 puts, 41,000 puts, and 40,500 puts. Now here also you can see there was a rise in the volumes, rise in the open interest. Implied volatility is between 15.6 to 16.90, and again there has been a drop in option premium, but this drop is not that much severe looking at to the other data. So as I said, on the downside, looking at this volume concentration, we feel that 41,500 could act as a very major support. And if it breaks, then only Nifty might drift to the levels of, or Nifty might slip down to the levels of 4,100 or 41,000 mark. So looking at this call and put data of Bank Nifty, we feel that the primary trend is still positive. Any dips should be used as a buying opportunity, and next week we are expecting a breakout of falling candle, which we have discussed on Bank Nifty daily charts. So overall, looking into the charts and derivative data of Nifty and Bank Nifty, we feel that the trend is positive. Any dips should be used as a buying opportunity, and one should be long. One should avoid going short at these levels. Now, friends, let us discuss the final segment of our show, which is the positional call. In positional call, I've identified one stock. The name of the stock is Piramal Enterprise. Now, this is the daily charts of Piramal Enterprise. The stock has been after a significant correction from more than 1200 levels. The stock has taken a support around almost 785. Now, After this particular fall, the stock has been consolidating. You can see the price volume action. The price is not, or prices are not going anywhere, but the volume are rising every now and then. This means the stock is into a consolidation mode, and we are expecting a breakout from this particular channel. Currently, the stock is quoting at 891. RSI is also showing some sort of positive divergence. So, stock is well poised for an upside rally in long run from these levels. So, long-term investors, positional traders, short-term investors can buy this stock on dips to 867 for an upside target of 1019 for long-term period. Now, as I said, the stock is on the verge of a breakout of this congestion range. Any short-term traders can also buy it. In short run, we might see stock testing the level of 950. So again, swing traders can also buy this stock. So overall, as I said, accumulate the stock or buy the stock on dips to 867 for an upside target of 1019 for long term. So friends, thank you very much for this watching the show. Have a nice trading week. Thank you.